Hello traders, Nick here, looking at the last few days of action. This is the SPY. For simplicity, it's the ETF, not the index, but it's daily candles, so it should be easy. So what happened? I'm going to look to the end of July, to actually the beginning of July, and see if we can make sense of the action and if we can get some clues going out of here. But before I forget, at the end there'll be a subscribe button. Hit it. It's free, and I do a lot of these videos. I'm going to do more of these where it's a play-by-play thing. So I'm just going to hit play and see if I need to stop it anywhere. Basically, we were coming out of the May correction into a strong June and follow through, and this is how it unfolded. The bulls and bears are battling it out. One day up, one day down. There's still, meanwhile, the volatility was still high because we didn't know what the heck was going on. There was yield curve inverting and all kinds of stuff. With the yields falling fast, the bond market hasn't seen this unusual setup where we have zero rates, negative rates, and yields falling, kind of like forcing the Fed's hand. I pause it here a little bit. So we are towards the end of July. And then we get the extra stuff that's self-induced, like, boom, 10% tariff came out of nowhere. Tweet, right? Market fell out of bed, and the market was already vulnerable. And then we had a huge dump into a scary spot around 282 for the SPY. But good things happened since then. We took time to recover. 2-3 ticks later, we recovered half. And then we kind of stalled, another dip. Now there's some good news with that because we didn't make a lower low, and we're still trying to battle that half mark. Now, a check back to halfway of a dip or a rally is normal price action. This is where, the bulls say, in case of a dip, a correction, and then you rally halfway, the bulls say, I'm going to keep trying to go, and the bears say, no, this is where you're going to stop and take a rest and think about it. We'll dip a little bit, they attack again to see if they can break it. So they hit it, they go to see if they can break it. So it's rarely like a V correction, boom. So they slam them back down, and let's see if they go lower. Can't remember actually, but I don't think so. Almost exactly the same point. So boom, boom, boom. So now we're playing ping pong inside these two lines, the blue one and the yellow one. And the outcome is still to be determined. The week of 8/30, so end of August, which was a pretty bad month, we ended close to the top and a little bit above it, I think. We poked just a hair, and then we ended it with suspense. So this was the end of, is this 8:30 here? Yeah. So this is Friday today. Market just closed, going into a long weekend. And I actually heard somebody on CNBC, I don't expect much to happen tomorrow or next week ahead of the September meeting. And I thought to myself, oh my goodness, okay, so let's line up next week as far as the event. Short week. Those are usually drama-filled. On top of it, we have a whole bunch of Fed heads talking on Wednesday. And we have the Fed Beige Book come out, which tells us, very important, because that tells us how the areas are doing. And this is what the Feds uses basically to make decisions, because that's their first hand, the front line, so to speak. And then we have a jobs report on Friday, and we have an ADP probably Thursday or Wednesday. Usually it's Wednesday. I don't know if they move it on a short week. We have a whole bunch of economic reports. And, oh, by the way, we also have, billions of tariffs, new tariffs hitting on Sunday night. So the futures will open Sunday night. Thanks, Carlos, for reminding me about that. We won't trade in the U.S. on Monday, but the futures will remain open like normal on Sunday night, I believe. So until the next day, until 1 o'clock when they close back just like normal. So it is going to be a wild Monday, but we won't be able to trade it here unless you trade futures. We will open on so the way it ended, there's a gap below and open air above. There's going to be a wild open next week. So down or up, I don't know. I'm not saying it's the end of it one way or another, but I'm just saying. Oh, by the way, this second dip, this was the Trump tariffs. This was the retaliation, which China waited pretty long, and then Friday, I think it was, there was an event from Powell, and just before that, boom, they came out and they said 75 billion of tariffs on auto imports from the U.S. And then Trump came out and had a tizzy about it, and then that slammed more tariffs, and that was that Friday, and then everything fell off a cliff on the 23rd. But it set a higher low. So now we have a range. So if I wanted to draw a box, I'll draw a box here, and it'll be what happens next. So okay, it's about time to talk about it right here. So I'm going to bring the sketch pad. I think I have one open already. All right, so this is a lower time frame SPY. I'll start with this one since it's already up and I already marked it up for somebody else. So this is a 30-minute chart for the SPY. This is the same ticker we were looking at. And this is the 23rd, the retaliation tweet, 24th, and then clearly $290 on the SPY is allergic. They hate trading. If you look back, there's plenty of fast candles, gaps, and everything around it. And tops, and so we have a tight range here on the 30-minute chart. So anything above, so 293 is going to be our resistance until it's not. So it's an opportunity. Every resistance line is an opportunity. If they break through it, the bulls, then 294, whatever that number is, I'm going to eyeball it 294.3.4. Clear above that, this is undoubtedly some sort of an inverse head and shoulders if that happens, and then so you rally this much-ish up if they can break out of this. So this is resistance 1, 293, 294 and change is second line. What about the downside? This is line 1, this is line 2. So I'm going to say anything below 291 is going to probably fill this gap right here, which is, what is that, 289. We have a good cluster of short-term support. I call it short-term support. So you can draw lines anywhere you want. Depends on the time frame you're looking at. 282 seemed to be strong, but who knows? All right, so I brought this for a reason to start this. So we can talk. This is the daily candle. See if we can come up with the same ranges. If I draw a box here, I'm not looking up to the right to see if these are the same values we were looking at. Okay, so look at that, 294 and change. 290, if I slice right through it, it doesn't hit a lot, and everything it hits, it's just big. It's just slice right through it. So it's allergic. So anytime we're going to approach the 90, I'm going to say, if we're falling, I'm just going to say we're going to go through it, and if we're rising, we're going to go through it. So that's my hunch, not fact, hunch. And if I look left, look at that. That was the neckline from which they had this whole move. All right, so we do have lines, and if I draw the bottom one, it's 282, but I kind of cheated because I already knew what it was from looking at this in the video. So clearly we have a range. So trading-wise, if I'm long, I'm sitting to see what happens with my stops, and my stops would be anywhere, depends on my time frame. It would be here, number one, maybe around here, or here, depends. Could it go lower? Yes, it could go to 270 their area, and if it loses this area, could go even lower than that, but I'm not focused on that, one step at a time. Could it go higher? We can set a new high in a blink. We're just 5% maybe off of it, I'm guessing. So trading wise, we are in a tight range. I chase the breakout in either direction if I'm trading. If I'm investing, nothing has changed. Yes, nothing has changed. Okay, so here's Google, for example. I did have a tight range. I said something's going to happen here. And sure enough, boom, they fell. They priced in the first leg. They refused it. They started to break out. They back to a pivot. Something is going to give with Google too. I bet you if I go into a smaller time frame, it's tight and something to move. Kind of like the SPY. Has support, has a wall, has a gap. So nothing has changed short term. Google is still going to make the same amount of money whether the yield curve is inverted this much or a little bit more. Same for Apple. Same. Now Apple, interesting, has a setup where it has an event where they tend to mosey on up towards it on September 10th, but it also has it's in the nice corner of President Trump. So he may one day say Apple is exempt, or somehow work out a deal with these other guys, say I will exempt Apple. I mean, I will let something happen with whatever their company is in China. I'm drawing a blank. Anyway, if they would say there's no touching Apple. So if that happens, Apple will run. I'm just saying. So it has an interesting setup. It did show good support. And when Apple has an event, it should have a floor because of that event. People want to buy it or hold it through the event. So I think if somebody has a credit put spread in Apple, they're probably going to make money on it. Not saying it's going to rally. I'm saying it's not going to fall. That's what a put means. There's a bid below it. All right, Nick signing out. This is a little bit longer. So things to watch, probably the TLT, which are bonds. And let me go to daily. In my opinion, they are too loved. Do people realize that they can get 3 times as much yield on owning a stock like, I don't know, almost 2 times on AT&T, 3 times on a stock like Ford? Instead of buying a bond, you buy a bond, you get paid maybe 1.45. If you buy a 30-year bond, you only get paid under 2. What was it today? 1.97? So 1.9 actually. So why are they rushing into bonds? Eventually they're going to figure out, hey, it's not the best trade here. But this is too much love. Same with the gold and silver. And I think the party is going to end in a bad way for all of these. Look at all of these weak hands here. I mean, if I have profits from here, as soon as I start seeing these gaps fill, I'm going to sell. So the door is going to be pretty small when they run out. For now, I can't compete with it. I can't argue with it. And this is on top of a rallying dollar. Usually downside pressure on everything priced in dollar. All right. So these are the things to watch. The VXX, obviously, the fear. Derivative, it's not the index. VIX is kind of broken for me as far as an intraday gauge, but look at fear. How tight is that? On the 30-minute candle, the buyers of the market, the stock bulls are in charge if the VIX doesn't go above 2750. Really, 2770, whatever that number is, 2764 will fill that gap here. So the VIX, the fear mongers have some work to do. That's it. And then just, do homework. Like Ulta got clobbered. So somebody needs to do homework and see if they really change the makeup of the company. If not, well, man, that's a lot cheaper today than it was yesterday. Just saying that there are opportunities, but someone needs to do homework. And how can I silence all the noise? Is just by trading the actual charts while knowing the homework. So if I know the fundamentals of Google, then I can trade the charts of Google. This is the SPX. We looked at the SPY, and you can see the same box. As soon as they break out of one range, they're going to run in that direction. And as far as the downside, yeah, there could be a lot more downside. But a lot has to happen for that to happen. So there has to be a breach of this box, a breach of solid support from the May correction and from the March correction. And then we talk about the last Christmas crash. All right, next slide now.